Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Friday, May 31st, about 6 a.m. Central Time. Overnight, the precious metals are weaker, but they are recovering from their lower levels. Silver, for instance, briefly dipped below $31 an ounce before recovering about 50 cents. So the low on the session, 30.94. Last trade as of this recording, about 31.46, just banging out a new high in the overnight session. So yesterday we saw the pressure was really found in the copper and the silver market. Copper had about a 5% correction over the past two trading days. Gold, on the other hand, held its own on weaker GDP data, an uptick in initial claims, and then the weaker pending home sales. So you're starting to see those higher for longer interest rates really weigh in, not only on the consumer, but also the consumer's habits. We're seeing those home sales, they start to break down. We're seeing a lot of new homes come on the board. And then also we're seeing markdowns on where those prices from the original listings are of these homes. So today we're going to see key PCE data. That's the Fed's preferred inflation gauge. It's of very significant importance, and being aware of where this key market indicator will land will help traders and help other market participants really stay informed and prepared for what the next market move will be. So if we see weaker PCE data, we might see a relief rally not only in the equity markets, but also in many commodities across the board, including the metals. You might see some weaker dollar index as well. So despite the volatility, though, of the week, what I generally do on the last day of the month, and I want to continue to give you guys kind of some of the insights as far as how I prepare, and it's really on a monthly basis. The first thing you do is you'll measure and map on June. You'll start to look at, hey, what are the key inflation data reports? When does the Fed speak? What are the things that I should be watching? What are the things that are going to drive the precious metals right now? Things like employment data. We'll have that non-farm payroll data. We'll have a Fed meeting. We'll also have inflation data, GDP, things like that. We'll have a number of different series of things that come out that'll help you prepare and stay informed as far as the market's direction. Now, despite that volatility, what I'll also do on the last day of the month is I'll look at what were the best performing commodities, what was I not involved with, and what was I involved with. So silver was the second best performing commodity, up 17.92%, platinum up 9%, gold up 1.6%, and copper up 1.3%. So a lot of great action here in the metals markets over the course of May. Now, really the brunt of that was the first 2 weeks of May. We saw that breakout and explosion higher, and then since then it's been higher degrees of volatility chopping around over the back half of the month. So some key levels here that I'll also look at not only on a daily, monthly, and weekly basis. So that's what you really should be doing on the last day of the month, is printing out those particular charts, and you could also measure and map that way. So you'll see where markets tend to have broken down just recently, but they haven't violated any longer term paths or channels that we've been trading. Now, the August gold futures remain right near the 50-day moving average at the moment on the August basis, but I think that we'll see some volatility and explosion once that PCE data comes out. So your critical level of support, I'd write this down on the chart, is going to be 23.49. You don't want to see a break below that level. If we take out that level, it could open the floodgates here for a longer and bigger washout. The resistance point is going to be 23.86. So I think really once we go above and beyond either of these two levels here, you're going to see the next really trend in direction. Now, on the silver market, we do have some consolidating action as well. The line in the sand for me, again, 30.23. We don't want to see a breakdown below that level. Still quite a big distance away, but given the volatility here in the average true range of about $1.26 a day, we could see that if we did break down and have another big washout day, we could be threatening those levels. Now, the breakout point on the upside is going to be about 32.55. We get above that level, it could really spark that FOMO action. Traders will come in. So using this type of weakness here in the market to start to position going farther out into June, July, and August, I'd start to look at some of these more inexpensive call spreads come on my radar. Generally, when I go into a market that I have an underlying belief and direction, I'll go in there with the most risk-adverse way, in my opinion, and that's going to be using call options and call spreads, where I'm not necessarily confident in the direction of the market. It's just that I have an underlying belief that the market will move that way higher. So again, we targeted those August 35, 39 call spreads, the July In September, we were looking at the 35-37 call spread. So we'll start to take a look at those, and if they come down to what we perceive as a value zone. So remember, this type of advice is generally reflected on how I trade, how I position, and how my clients trade and how they position. So general public, give us a call. We'll help you map out and form a trading plan. If you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.